In this video, guys, I'm going to run through a day trade I took on the Nasdaq where I got stopped out on. It looked like a great trade. It was setting up nicely. We'll talk about some of the setups, the rules, the entry, and ultimately where I got stopped out. Stay tuned. Hey guys, welcome to you. Thank you for joining me. Alright, so Nasdaq, great trading vehicle, especially for day traders. I was trading it on the ETF QQQ. Same thing whether you're trading it via a spread bet, via a CFD, or whatever you choose to get exposure to it. It was setting up nicely. It ticks a lot of boxes for me. It's the kind of trade that I will do regularly, and you know, they're really a good trade to take. It's a really nice trade, good risk reward ratio, high probability of success. You're ticking a lot of boxes, but this one didn't work out. So as it's recent, still in my mind, still reasonably fresh, just going through it in my journal. Thought, you know what, if I do a quick video, maybe you guys get something from it. All right, so hit the screens and I'll tell you what it's all about. All right, guys, so QQQ, which is the Nasdaq ETF. Now, those of you who don't know, kind of recently, depending on when you're watching this, I suppose, if I go out to a daily chart, I may as well go to a daily and we can see the kind of backdrop, because it's all very important. And like I say, I mentioned many times before, the bigger picture, you know, aligning yourself with the bigger trend is so useful. It's not always, it doesn't always have to be there. Depends on what you're trading. If you're trading exhaustion setups, fine. If you're trading momentum setups, it's almost essential. So we had the kind of drive lower here. This is called the COVID low, if you like. Push back up, very strong bounce. Completely out of sync with other markets, but that's by the by. It's a strong market. It's a strong market, so I'm always looking to buy a strong market. I'm looking to sell a weak market. And if you're subscribed to the channel, or if you've been around a while, you know, you'll know that tends to be the thing that kind of helps you out when things even aren't quite right or they're struggling. You know, the strength will ultimately win through most of the time and keep you on the right side of the market. It's always going to work, and this is one that didn't work. But the stop was manageable, stop was reasonable. It's not the end of the world. So background. Push lower, we're getting kind of V-shaped reversal on tech. We're not getting it elsewhere and other stuff, but that's by the by. The market I'm trading is this one. This one is a strong market. Now, it was 18th, and I'm taking this trade, or 15th, sorry, I'm taking this trade. Yeah, sorry, 18th, I'm taking this trade. So we've pushed up. If you look at the overall bigger picture as well, because it really does makes sense to bear it in mind. You know, we've got an uptrend pushing up here. We've got pullbacks that are bought, pullbacks that are bought, push up, pullbacks. Now, we'd pulled back two big bars, pulled back to this support level here, held support, bumped through the low here, push back up, good close at highs, next day gap up. I'm trading this 18th day. Let's go to a 5-minute chart and let's see exactly what it looked like on a daily, an intraday perspective. Let's clear off some of this stuff. Okay, so if we go back to the 18th, which was here, this is the day I'm trading. So don't remember, we had the two drive lower, the gap up, and I'm looking for strength. Now, this is a setup that is very specific in the rules, very kind of methodical, and it normally works out well, but again, the day, guys, you just never know. And the point is you have to have your stop in place to deal with this. So the idea of this trade is you're looking for an evening drive. So you're looking for a close at highs. That was my thesis. That was what I was looking for. So after we kind of had this push higher, nice breakout trade, good drive, held, broke out again. You know, this is a kind of textbook channel break, you know, little bull flag break here on the 5-minute. Classical stuff, pushing to highs, but it started to fail. But again, if you know your timings, you know your indices, you're a day trader, you know that midday kind of stuff is not a bad time to kind of look for unwinding around that kind of time frame. Unwind down, that's by the by. Now, as we start to come lower, my thesis was it's the same type of setup here. We're getting a flag, we're getting this kind of very shallow downtrend, almost a bull flag, not quite, because this is a little bit different, but the same kind of thing. And then when we started to push up higher and broke out of it, I'm going long. So I'm going long as we start to break out of here with a thesis. Multiple things on this thesis, guys. Number one, we're gapping up and we're holding the gap. Number two, the daily chart is strong. Number three, we've already seen pushes back to the VWAP that have been bought. So the first one here, bought. Pull back here, first one here, a second one here has been bought. Now I'm looking for a close at highs. So there's plenty of meat left in this trade. There's time for it to do it. We're only 25 past 8. Market closed at 9 o'clock UK time. plenty of opportunity to break through the highs and close at highs, and this could easily have gone, if you can't start to extrapolate out some of your lines, you go, okay, if we go from here to here and we start to extrapolate it, you know, an easy feasible target 229 to 28.50. So I'm not looking for anything crazy. The risk reward ratio, however, is good, because as we start to push through the highs, I can say, well, you know what, I'm going to take it out if we start to come back and tag and go below that low, which is 227. A little bit higher than 227, 227.15. So I'm in at 227.75, call it. You know, it's a reasonable 60 cents risk, and you know, there's plenty of potential upside in it. There's 3 to 1 or 2 to 1 risk reward at minimum. You know, 120, $1.20, very, very easy. It's not, you know, it's not something that is a bad risk reward ratio, and it's framing the trade. And something I talk about very often, guys, is framing the trade. And if you can work out a good place for your stop, regardless of the setup, you'll always do okay over time. Well, you know, obviously there's other things to it than that, but it's one of the major things. So anyway, breaks out, looking great. And I'm always going to have, by the way, guys, I'm day trading this, and the play is purely the thesis of, hey, I want us to close at highs. I think we will close at highs. Then I'm going to come out at the close, regardless of where we are, or I'm going to come out and a stop. And so we got this drive up, we got this drive higher, took out the highs, and then we're just kind of fiddling around a little bit, and it ended up in the last 5 minutes undoing all the gains, coming back, and end up coming out at just before the close, because it's the QQQs, you can't trade it over the close, and taking a little bit of a stop on that trade. Small stop, small loss. You may say, did you have to give all that back? Should you have scaled some of the highs? Shoulda, woulda, coulda, guys. The thesis was this, was we were going to rally into the close and close at highs after a good gap up. So that's what I was looking for. It was, the time was too tight for me to kind of fiddle around with it too much. In hindsight, should I have come back as we came back up through the highs? Maybe. I didn't have much in the trade. I thought I'd stick with the plan. The plan was that, came back out, clipped at the close, take a little bit of a loss. Should I have bought the stop to break even? You know what, potentially there's an argument for that. If you'd said that to me, I'd say that's valid. Maybe after having that much drive up there, I could have pulled it to break even. That would have made more sense. But again, my thesis was purely we close at highs. We could have kind of spiked back up again in a few minutes before the close and given me a little bit extra rather than taking a stop there. So I didn't do it. But anyway, guys, that's a losing trade. It's a day trade. Tick the box. I'll take these all day, every day. Strong market, gapped up, great, tick, tick. Holding above VWAP, tick, tick, tick. Flags, rallying, reversing, not doing any deals under VWAP. Starting to get momentum into the close of the final hour. Tick, tick, tick. Loads of boxes being ticked. I'll take these all day, every day. A catalyst in a sensible place for an exit or a stop. Yes, all these boxes are ticked. Looks great. Just didn't work out. That's the way it is. That's trading. But am I going to start amending things? No, I'm not. Am I going to take these again? Yes, definitely I am. But I thought I wanted to share it with you to show you some thought process behind the trade. Maybe it's helped you, maybe it's not. Hopefully it has. And just show you as well, guys, that, you know, this is the real world of trading. So you get stopped out. Some other trade reviews I've done, which will be up soon, or they're up already. You know, you've seen that I had targets that weren't hit, but I managed to exit some of those for nice profits on some of those trades. Some trades you get stopped out, some trades you hit final targets, some trades you look like an absolute genius, you come out of highs and lows. That's trading. You can't get too emotionally attached to it, is the big thing. And you just got to stick to your plan and know what works for you, know what works over time, and have the confidence to still pull that trigger. But I really think that having the good risk order ratio, having a sensible place, an exit, regardless of what happens, is so, so important. Anyway, guys, keep your risk manager, whatever you're doing. I'll see you in the next one. Bye-bye.